Now, let's look at trial balance, which forms one of the important inputs for the preparation of the balance sheet, which is the statement of financial position, and the income statement, which is the statement of comprehensive income. It's basically derived from the ledger, which is account specific debits and credits. So trial balance comes out as a summarization of all the ledger accounts and the balances in each of the accounts. So all different ledger accounts are summed up, one for each account. A summary of that same is prepared, which will go in as an input to the creation of the balance sheet as well as the income statement. So in general, we see the trial balance being created with two different headings, the credits as well as the debits. So a list of all the accounts will be shown along with whether it's a credit or the debit. So if we are more and more comfortable with the entries that go into the balance sheet and the income statement, probably the construction of this is more simpler, because whatever would be coming out in the credit items are anything that's a part of the income or a revenue in the P&L statement that comes into the credit, whereas anything to do with the expenses, it goes as a part of the debit. And similarly, anything that goes as a part of the liabilities in the balance sheet, it comes into credit. Anything that goes as a part of assets, that goes as a part of the debit. So once you know this fundamental, the creation of the trial balance becomes quite simpler and easy to make. Right? Any kind of trial balance can be prepared in the same manner. But of course, there are quite a few issues that typically crop up, especially when we are dealing with items relating to depreciation and fixed assets or non-current assets. Right? Now, whatever we are disclosing, in general, what happens is the one that is, the expense that is purchased at cost for that non-current asset, we show it as a debit. But whatever is the accumulated depreciation for the same, whatever has been the depreciation done till date, the accumulated depreciation for the same, we would show it as a part of the credit. It is mostly like the net asset. So the net asset, which contains the subtraction of these two, is still going as a part of the debit. Right? So that is one simple thing that we really need to be comfortable with. And most of the time, what is displayed as a part of the trial balance is it does not contain the depreciation of the current year. The depreciation of the current year is present only in the income statement, but because it being a non-cash item, at the preparation of the balance sheet and the income statement, this number comes into picture, not in the trial balance. Similarly, when we are talking about the retained earnings account also talks about the earning that was retained at the beginning of the period. This number does not give me this trial balance does not give me the number at the end of the period. And when the income statement is typically prepared, that is when the trial balance will be updated. And once it is updated, all my other numbers, especially the income statement related numbers, the revenues, the expenses, the taxes, all these items would be set to zero. So as a part of the retained trial balance, the retained earnings that I am going to get is at the beginning of the period. The same thing with the inventories. What I am going to see in the trial balance regarding the inventories is the number at the beginning of the period, not at the end. And whatever at the end, again it is updated along with the preparation of the income statement as well as the balance sheet. So, one thing which we have to keep in mind is whatever the trial balance is containing, it contains all the initial beginning of the period numbers, and whatever are the expenses or the revenues corresponding to the current period, they would be adjusted to come out with the end of the period figures. But yes, as a part of the creation of the financial statement, the trial balance becomes one of the most important aspects because we can very well see whether the total credits are matching up with the total debits. That has to typically happen, and that is what will get translated as a part of the balance sheet as well.